imagine your best friend was an investment banker and he discovered a stock that was so good that every bank, every fund, every major investor out there was paying them money. Yet it isn't a financial institution with all the crazy risks of all the crazy weird ass products that banks come up with and hold on their balance sheets. It's like a shovel for the whole industry. And to make it even better, it's just dropped very significantly in share price for a very good reason that actually makes this potentially an enormous buying opportunity. Well, if that were the case, then you've tuned into the right channel. So let me break down what the stock is, give you all the data so you can become the best informed investor out there. Make your own decision. This isn't financial advice, just Felix here sharing with you some digging. And you can see I'm on a laptop. I'm in the south of France right now. This here is what? Well, at the top, you've got the mystery stock that we're talking about. And then at the bottom, you've got, does anybody recognize that chart? It's the S&P 500 index since, if I could spell index, as bankers can't spell very well, since 2011. You can see there is a massive, massive outperformance by our mystery stock. And that is generally a sign of quality, right? So let's look a little bit deeper then here. This is from their annual report, and it shows you one number across very colorful and very confusing charts. I don't know who came up with this, but he was a bit of a weird person. But look at this. Recurring revenue, 97%. They don't have to do anything. They don't have to have a sales force. They could just go to sleep and they'd still get 97% of last year's revenue next year. That is insane and almost unheard of. It means nobody really leaves their business and 3% non-recurring. Basically, it's a pretty glorious business. I mean, a lot of Netflix are going, what? How do they do that? How can we do that? And the stock is down. Why is the stock down? Well, let me show you the chart here. This is an optionswatch.io, and I'll tell you a little bit more about that in a second. Well, actually, let me tell you now. We just released alerts, which means every single day you get an email like this with our trend alerts. And I've literally been working on this particular indicator for like 20 years. I'm so excited that we've now automated this because when I first got into banking, I was the guy who'd come up with trade ideas. So I'd go through all the data. We spend $100,000 a year, something like that, on data subscriptions. And I'd clobber it all together into some sort of enormous spreadsheet, essentially, and then get alerts, and then we share it with the sales guys. And this here automates the whole process. If you just look at LLY for today or IBM for today, for example, those are two charts that look very interesting. Not saying you should blindly buy them, but it's something that helps you find trades much, much, much more quickly. And right now, this is free. All you're going to do is head over to optionswatch.io, grab yourself a free account. It's free for an entire month. And if you then stick around, it's like $15 or something like that, then you will get included this trend alert every single day for the rest of your subscription for free. And if you join us later, you're going to have to pay extra for this because, well, we want to reward the people who are supporting us building this to make the world a fairer place. That's really what this is about. But if I look here at what the heck happened, and you see that drop there, the stock dropped. So on earnings, they reported that two of their largest customers had combined into some sort of combined mess, and therefore they had less sales from that now combined customer because some of the old subscriptions got canceled. That's a one-time event, doesn't really matter in the long run. And if you zoom out a little bit here, you can see the stock trades in a range essentially, that approximate range. And I'll draw another line here at the bottom. And we have a lot of ups and downs. And we have these opportunities when the stock's at the lower end of the range to pick up the stock for cheap. And right now, in my opinion, is one of those moments. So I like it from an end point of view. And of course, I've given away the name of it now at the top here, MSCI. Now, what the heck do MSCI do? Indices. So if you buy an ETF or you buy anything really, any fund, any ETF mostly, they pretty much all track the MSCI index, and there are lots of those indices, and MSCI makes money through providing data and essentially data subscriptions. It's been around forever, and it's a very, very well-run business. If you look at their earnings per share here, what do you see? Every single quarter, the green number means that they're beating market expectations for each of the last 2 years. It's just last quarter, the revenue came down a little bit, and that's literally the UBS Credit Suisse merger, because Credit Suisse failed and UBS gobbled it up. And so they lost 5 or 6 million revenue because of that, but they still made more money. So is it really an important thing? Probably not. No, probably not, but just a little bit down there in revenue. And that's really why this is an opportunity, because you've got an amazing business with amazing numbers, and I'll show you the numbers in a second. You've got an opportunity from a weird one-time off-event bank failure, and the market's punished them. But look at the numbers. Look at these numbers. Cash flow is great. It's growing very nicely. Stock hasn't gone very far. As a C, that's good. It's insanely profitable, and it isn't very expensive. So overall, me likes it. And this is another chart. I nicked this from Arnie. Arnie, if you're watching, love your channel. Give the guy a follow on YouTube and also on Twitter. And MSCI is one of the goats in the sector here, basically in line with the S&P. The S&P 500, Dow Jones indices, they're basically the competitor. MSCI, FTSE Russell as well. Those are the 3 companies that basically own this space. 25% market share for index construction and data and so on. So they are going to be here for a while. They're not going to go anywhere, because actually the fund that I put a lot of money into, they track themselves against the MSCI, so they're going to have to pay the money. But just look how beautiful this business is. A gross profit margin of 82%. It's like Microsoft doesn't do it, Nvidia doesn't do it, like hardly anybody does 82%. It just means it's very hard to replace you. Revenue, 2.6 billion, of which almost half is real profit. And profit's been growing at 12% a year, which is pretty staggering given how old this business is. So is there anything not to like? Honestly, I like it a lot. I own it. I'm not saying you should, but do some research, do some digging. And when you look at these longer term, in my view, long-term stocks, you could just buy them every month, or you can look for opportunities where it's dipped, particularly for slightly unfair reasons. Swiss bankers are doing what Swiss bankers do. And then those are opportunities where I might load a little bit more up on that kind of thing. But my point here is never to tell you to buy something. My point here is to hopefully educate you and show you how we can look at things, how we can find things, and give you the data through Options Watch to give you the same quality information that Wall Street has. So make sure you get those trend alerts over there, completely risk-free, 30-day free trial. And if you like it, you stick around. If you don't, you haven't lost a thing. I thank you for watching. I thank you for tuning in. If you enjoyed this particular video, then share it with a friend or a pug or a golden retriever. I saw a lovely pug today. And I love you for watching. See you on the next one. I set out on a mission to find an industry and then companies and stocks that I could buy and hold forever.